There's a lot of fear and panic right now around Tesla stock because two key executives of Tesla has left the company. And everyone online, the media, on X, on YouTube, everybody, they're spreading fear. And it's nothing new. I mean, I already addressed this on X. If you guys aren't following me there, then I don't know what you guys are doing. But I already talked about it and I already shared my view on it. I'll make a separate video if it gets too out of hand. But I doubt it in about a month time or so anyone is really gonna care. So with that being said, let's cancel all the noise, keep our eyes on the prize, and focus on our long-term investing. 2030. I'm going all in into Tesla stock. If you guys are a new viewer of the channel, well, yeah, I'm pretty much 99% all in on Tesla stock. And yes, I bought today when everyone was saying,
oh my God, no, Tesla stock's gonna go down. People are leaving Tesla. 10% mass layoff.
Like as if it's the first layoff. Give me a break. But let's cancel all the noise and focus for 2030 because someone is going all into Tesla stock. We kind of want to retire off of it in some way or the other. And it's an updated video. I did a lot of video on this channel on how many shares you would need on Tesla stock by 2030 to retire. So here's an updated one on top of that because we're getting a new income stream very soon in the next 2 to 3 years time. Obviously, we're going to take a look at it all the way in 2030, and that's going to be adding robo-taxis into it because if you guys been living under a rock, August 8th is when Tesla's going to unveil the robo-taxi, pretty much showing how it's going to work, how they're going to lay it out. And I'm expecting in the next 2 to 3 years, they're going to start rolling it out. And I took a very conservative approach on how they can do it. I've already made a video about it, about the robo-taxi. You guys can check it out here, Fleet Operator and Tesla's Fleet, breaking it down on how it would work. And I think it makes sense. But anyways, you guys can check that video out and use this as a reference as well. But can we still retire? How many shares do we need in 2030 to retire off Tesla stock? And that's what we're going to get into this video. So smash that like button if you guys haven't already and subscribe and let's get down to it. Let's go. The first thing we got to figure out is, well, how much do we actually need by 2030 to retire? In a 2021 or 2022 survey said that the average cost, living expense on a monthly basis was around $3,200. And obviously from 2022 till now, it's about what, 5-6% inflation every single year. So that 3,200 is now what, 3,400, maybe 3,500. This is just the average, all right? This is just the average. But taking this average and giving it a 5% inflation rate from 2022 or 2021, whenever the survey came out, all the way to 2030, that $3,200 a month turns to $4,600, which is over $55,000 a year just to live paycheck to paycheck or just paying off your entire expenses. If just living life is over $55,000, which is, crazy in 2030. Let's round that up to $5,000 every month, and let's slap on another $1,000 to $6,000 a month because we want to retire comfortably, right? We want to go on vacation. We want to, not be tied up. Not all our money goes towards expenses and be tied up just to our expenses. We want to have some free money, do whatever we want to do, whether it's travel, go places, buy a new toy, whatever it is. We're going to go with $6,000 a month or $72,000 annually. Now hold on, Pejjy, hold on 1 second. Where am I going to put my money that pays me $6,000 every single month? That seems too good to be true. Well, not really. It's completely doable, and in this case, to stay safe, let's take the S&P 500. On an annual basis, S&P 500 gives between 10 to 12%. Let's bring that down to 7%, just to stay conservative. Going with the 7% annual return, obviously that's an average annual return, so that's important. I can't miss that part. It's an average annual return. Some years up, some years down. But going based on that, you would need $1 million invested in the S&P 500 at a 7% annual average rate every year to withdraw $6,000 a month or $72,000 annually and have money for over 40 years. So that's how you can do it. Now, Pejjy, hold on a second. Why would I sell Tesla in 2030 when it's going to grow much more than that and go to the S&P 500? That sounds like a big mistake, and it may be. I'm not financial advice. This whole video is not financial advice, but if you want to de-risk, want to have peace of mind, because following Tesla stock, guys, it's a pain. It really is a pain. And one who is following Tesla has high tolerance. And this comes to a point where once you made the money, you don't want to deal with all the BS anymore. So that's why you would go to the S&P 500. And that's my logic. Obviously, if Tesla's going to be growing more than S&P 500, why sell it, right? But in this case, let's go with S&P 500 7% return at $1 million. That's $6,000 every month. So let's see how many shares you need today so you can grow that to $1 million by 2030. Let's get down to it. Smash that like button because it's gonna get juicy. Let's go. So here is my Tesla 2030 retirement chart from the ultra bear all the way to the ultra bull, and then at the end we'll do the realistic, what I think, what could happen. There has been some adjustments, and you guys can see for the ultra bear in my previous video I had 10 million. I brought it down to 8 million, and from the ultra bull from 25 million to 18 million. I think these are more realistic numbers, and everything is already filled out except for the PE, which we'll get to that in a bit. I just want to show you guys what I exactly did so there's no confusion on why this is like that and that's like that, right? You can see average selling vehicles going down as we increase the vehicles sold, which does make sense because total addressable market, all that goodies, the lower the price, the more units you're going to sell. Basic economics. Vehicle operating margin, however, I reduced it from 20% to 17%. Now I do think this could be as high as 25% by 2030, especially when COGS are down like below like 18,000, 17,000. But taking this at a much more conservative note, 17% for the vehicle operating margin. And here are the vehicle profits for the ultra bear all the way to the ultra bull. Energy for the ultra bear, I know it looks very low, 32.2 billion at a 20% rate of only 6.4 billion in profits. Well, that's because it's only 2 megapack factories at full capacity. I'm sure there's going to be more every year, but that's the ultra bear case. For the bear case, that's 3 megapack factories at full, all 40 gigawatts by the way. In the base case, 4 megapack factories at max capacity at 40 gigawatts. Bull case, 5 megapack factories at max capacity, and the ultra bull case, 6 megapack factories at full capacity. Most likely we'll have around 8, but we'll leave that for the realistic part. You guys can see services, I just dropped down the operating margin from 10%. Looking into this, I don't think 20% was really that much of a realistic scenario because services for Tesla, when it comes to supercharging and other services, they are low margin. So maybe we can even decrease this even further, but leaving it at 10%. FSD global revenue for the ultra bear case, all the way to the ultra bull case, you guys can see the numbers are very different. And that's because, well, FSD is based on how many vehicles you have on the road. And of course, if Tesla sells more vehicles on the road, they can enable it just like how they're enabling $99 per month. And this is based on $99 per month only, not one-time subscription based. But the more vehicles they have on the road, the more eligible vehicles they can. And this was taken at a 40% rate. And these are numbers that I got. And this is at a 60% operating margin. FSD licensing keeps decreasing every single case because obviously the less cars Tesla sells, the competition or other EVs are available on the road. And if they license Tesla's FSD, well then they'll have more revenue and profits coming from there because they have less vehicles, they have less market share, so they can do that. That's why for the ultra bull case it's less, and for the ultra bear case it's more, and this is at an 80% rate. This should be closer to 100%, but 80% rate. But licensing, I do believe other auto manufacturers will license Teslas at full self-driving, but to what level extent, that we don't know. And here I try to keep it conservative, and the numbers are freaking bonkers. It's it's crazy. But we'll look at it even without it later on after we do the PE and stuff like that. And last but not least, adding robotaxi here. Tesla's fleet only. We're not even doing the normal vehicles on the road. Like if you're a customer, if you're a Tesla owner and you can do robotaxis, that's not included. It's just the Tesla fleet. And again, I've already made a video about this on the robotaxi analysis, which you guys can find in the card in the corner here in the video there, or 2-3 videos back, but Tesla fleet only. Tesla is doing their own robotaxi. They're not relying on anyone else. They're building this next generation vehicle. They're turning them into robotaxis. And that's how they're doing it. So that's how I got these numbers. And you can see 10.4 billion in revenue at a 50% operating margin here, all the way to 31 billion, which is insane because there's more vehicles being sold. And so Tesla can use those, their own fleet, because they sell to themselves. They can do that. And they can use that for their own fleet and generate robotaxis like that. That's how I did it. You guys can see the total revenues here, which just goes crazy from like 463 billion all the way to 773 billion dollars, which is just insane. I have taxes here, which I didn't add before. Now I'm adding it, so this way we can get the pure net income. And I did 20 billion and I incremented by 2 billion every single case. Even in the ultra bear case, close to $100 billion, which is insane. And in the ultra bull case, around $150 billion. Shares outstanding, it is reduced to 3.25, down from what is it now? I think 3.5. So they are doing a buyback. And I mean, they should be doing a buyback when you have net income almost reaching $100 billion every single year. Now it's time to find the PE and what the stock prices would be in 2030. So if you guys are ready, man, smash that like button. So for the entire case here, to keep it simple, I put a 30 PE, and I think that is conservative. And when you have robotaxi, FSD licensing, and FSD global revenue going wild, maybe we can push up to 40 PE, but keeping conservative at a 30 PE, and this is what we get. In the ultra bear case, we get a stock price $8.94 per share, or a market cap over $2.9 trillion. In the bear case, over $1,100 per share, and a market cap almost reaching $3.6 trillion. In the base case, almost $1,200 per share, and a market cap almost reaching $3.8 trillion. In the bull case, over $1,250 per share, and a market cap over $4 trillion. And the ultra bull case, almost $1,400 per share, and a market cap almost reaching $4.5 trillion. Which is quite interesting because this matches what Ron Barron has been saying. Now, how many shares do we need in every single case to reach that 1 million by 2030? So let's start off with the ultra bear case. We would need 1,118 shares, which would be just below $179,000 invested today to get that value of $1 million by 2030. And again, I'm going based on the current stock price of 160 because that's what the stock is right now at the moment. So over 1,100 shares needed now, or just below $180,000 to be in the, if you believe the ultra bear case is the case. Now, here's the thing with the ultra bear case. If we go ahead and remove the FSD licensing and the robotaxi and the FSD revenue, all that kind of stuff, with a 30 PE, that's 413. But then that doesn't bring any income for the AI, right? We would have to bring down the PE to a 20, and that would be just below $1 trillion in valuation, $275 per share, and you would need over 3,600 shares, or almost $600,000 invested for it to be $1 million by 2030 if you only put the cars, the energy, and the services, which is not pocket change, guys. This is a lot of flipping money, and we hope the ultra bear case does not come true. So let's go back, leave it at 30 PE. Let's see ultra bear case. We would need 908 shares, just below $150,000 invested for it to turn $1 million. Again, if we remove the entire FSD packages here, you can see, obviously we're going to bring that down to a 25 PE. That's over $1.5 trillion in valuation, or $480 per share. You would need almost 2,100 shares then, and a value of over $334,000 invested today, which is insane. Better than the bear case, ultra bear case, but you know, that's not that. We'll go, looking at FSD global revenue just by itself as we keep going forward. In the base case, we will need 858 shares, or a little bit over $137,000 invested today for that to turn into $1 million. Removing all the FSD stuff in the robotaxi, that's 1749. I mean, bring down the 25 PE, that's just below 2,000 shares you would need at around $505 per share, and over $1.6 trillion, $316,000, which is a lot of money. We really do hope by 2030 that at least the FSD global will happen, and we'll go over that in just a bit. In the bull case, at 30 PE, you would need 778 shares, or invested just below $128,000 for it to reach $1 million, removing all the FSD stuff, and give that 25 PE, just a little bit over $1,800 per share, and a market cap of 1.8 trillion. So you can see, with no FSD, Tesla is not really that much of a growth company. I mean, we need this FSD to come online and actually become a real source of income for Tesla in order for this to see exponential growth to the 4, 5, 6, 7, 8, 9, 10 trillions, and then you got the bot after that, which is insane. But that's the bull case. The ultra bull case, you would need 724 shares, or just below $116,000 invested today, which will be $1 million. Removing all the FSD and robotaxi stuff, anything with the AI, give it a 25 PE. That is a market cap of 2 trillion, or a stock price of $629 per share. Shares needed now just below 1,600, and $250,000 you will need invested today for it to turn into $1 million, which again is not pocket change, but anyways, but going back and adding everything again with a 30 PE, these are how many shares you would need today if you believe these will happen. Now, let's be more conservative and say that, let's say licensing doesn't work and robotaxi doesn't work at all for all of them. Let's remove it for all, and bam. Here are the differences you guys can see. And here's the thing. I do believe giving it a 30 PE when the FSD is growing very massively and exponentially, maybe even a 35 would make sense, but giving it a 30 PE, I think this is conservative conservative enough. But as you guys can see, you would need, in some cases, twice or at least 30% more shares or more money invested in if you just remove the FSD licensing, robotaxi. And this is why it's very important when you're doing long-term horizon for Tesla, you have to add the robotaxi and FSD, because if you don't, you're going to find other stocks more attractive than Tesla. Just my opinion. When you're removing the AI part of it, then Tesla is pretty much just a car company and a little bit of the energy company, because if we look at the energy, that's making a big impact as well, especially when megapack factories, when they scale, they're going to make a big impact. A car and energy company, sure, but the AI part is what's going to take Tesla stock to new heights. But let's put back these numbers and let's compare to my realistic, what I think what could happen. And this gets really juicy, guys. But smash that like button. I know I'm saying smash the like button a lot, but smash it. All right, let's go. So realistically, I do think Tesla's going to be selling around 12 million vehicles. Before it was 13.5 million, but I brought it down to 12 million because Giga Mexico is being delayed heavily. And, there's not many other expansions really happening. It's a standstill right now, and this will delay it. So that's why I reduced it down to 12 million. Average selling prices at that time, 32,000, 18% operating margin. I did increase it here to 18%, 69,000 for the vehicle profits, which is quite funny. Energy revenue, a whopping almost 132 billion, 20% of $26 billion in profits. Why is it that high? Because I'm saying 8 megapack factories ramped up to the max. Now, is this a little bit optimistic? It is, but I do think that megapack factories are a bit more easier to build than building a whole gigafactory and getting all that done. So I do think every single year that passes, Tesla is going to announce a new megapack factory. And I do expect one coming maybe in the third quarter or fourth quarter. Another one coming as well, which will be number 3. And if they do this every single year, that will be 8 megapack factories until 2030. Service revenue at $50 billion, 10% rate at $5 billion in profits. FSD global revenue of 21.4. FSD licensing revenue of 44.2 billion. Robotaxi of 13 billion. And again, I think these are conservative. We get a total revenue of $644 billion with taxes being 25 billion. We get net income of a little bit over 131 billion. I think this is an easy 40 PE, because if we have the robotaxi licensing at FSD, then we will get a stock price of $16.15 and a market cap of over 5.2 trillion. All we would need is 619 shares, or an investment just below $99,000 today. Right now, if the stock is 160, if the stock goes lower, say to 150, then all you would need, not just for the realistic case, all the cases, of $93,000 just below then to do it. And if it goes to 120 or 125 now, then you would only need 77, and some are saying 69, then you would only need 42,000. But 160, because that's what we are right now, just below $100,000 invested in a realistic scenario. Now you may say that 40 PE is too high. In my opinion, I think that's just right when they have FSD global revenue growing exponentially, robotaxi starting to increase, and they have licensing going on as well. I think 40 PE, and because it's a lot of growing, it's a lot of room for growth. This will be 15 to 20% growth every single year with these 3 alone. Forget the the vehicles and the energy and the services. Just these 3 alone is about 15 to 20%. Apple is growing 6% every year, and they have a 25 or 28 PE. If they're going to be growing at least 15%, I think a 40 PE is just right. But if you want to bring it down to a 30 PE, okay, that's 12, 11. And just below $4 trillion in valuation. 826 shares is needed now, which would be an investment today of over $132,000 for it to reach $1 million by 2030. I really do think that in 2030, Tesla's going to be a whole different beast, whole different company. We're not going to be seeing it as a car company anymore, when they're going to be going crazy with their FSD global revenue, with their licensing and their robotaxi, and maybe some other things that are coming along that I didn't even add here. A supercharging network I didn't even add here. You know what I mean? So we have so many other things that Tesla is working on, that Tesla is doing, that all these short-term noise is really getting in the way, which I don't mind. I get to buy more Tesla shares on the cheap, and I'm very comfortable in doing it because I know in 2030, 2031, 2032, at least at 2030, things are going to be completely different. And if you guys want access to these charts so you can figure out what works for you, you guys can check my Patreon, investor level, On that level, you guys can go ahead and customize whatever the heck you guys want, play around with these numbers as well. But that's it, guys. That's how many shares you would need to retire off Tesla stock if you believe the Ultra Bear, all the way to the Ultra Bull, even adding and removing some stuff. Of course, guys, this video is not facts, it's only a prediction and obviously entertainment for you guys to see how many shares you would actually need at what price point, at what to consider and what not. There's a lot of elements to it, especially when it comes to Tesla, and when more income streams get added, the more complex it gets. You know what's really exciting about Tesla right now is them unveiling the robotaxi on August 8th and showing us how it's gonna work. That's gonna be really interesting. But what's the value on it? The value on this thing, it's a lot. And Tesla can do this in many ways, and I did cover it in this video right here that you guys can check out the robotaxi analysis. There's two different sections, Tesla fleet alone and the fleet operator, and the numbers gets very sheeshy. Check it out, guys. You guys won't be disappointed. Guys, get your I Bought a Dev t-shirt with your she short. It's a way of supporting me. And subscribe, and I shall see you guys in the next video. See ya.